3, 2, 1, go. Go time.
All right. I guess it's time to go.
Yes.
Okay. It's Sunday. We just got done doing the members only call.
Yeah.
Hopefully there are some folks that watch the members only call that are going to be watching this one too.
Yeah, if you guys aren't members of our site, then we do, obviously for members only, because we just said it, every month after the PIP comes out. It's just a good time for us to talk about performance for the last month, talk about things going forward for the month ahead. It's just one of the things that we do from an analysis standpoint that's really driven towards just the members and allows them to ask us questions. We do it like in a webinar format. And so, if you're not a member, it may be a reason enough to become one, because between the analysis that put out every week and that call,
and the members only Facebook group.
Yeah, and that was where I was headed next, is we now have the members only Facebook group, which allows us to really dig into performance and what's going on specifically. It's more details, I guess. More in depth.
It kind of frees me up to talk about I just don't have to sort of throttle what I'm saying.
Yeah.
Yep. It helps a lot. It helps me a lot having that space to do that. And hopefully everybody likes it.
Yeah. So, we've got good reviews so far.
Yeah, so far so good.
What do we got on for this week?
All right. Weekly update show, 11 April 2021. So I don't know how we managed to do this, but we've kind of shifted a little bit from quotes to books. And staying with the book theme is a book that is awesome. John Malden is the author. It's called Endgame, The End of the Debt Supercycle and How It Changes Everything. If that title made you roll your eyes in the back of your head, the rest of the book will too, to be honest with you. But Malden's stuff is amazing. He's got an email list at maldeneconomics.com. It's well worth getting on his free mailing list. The stuff he puts out is it's all about the economy, the world, U.S. economy, debt, credit, like everything that's going on in the world. That sort of as a macro view of, we don't talk about fundamental analysis usually in a way that is something that we do in terms of technical analysis, but it all comes into play, and he does an amazing breakdown of all kinds of very complicated things that go on in finance in the world. So he wrote this book, Endgame, and just one of the sort of platitudes on the back cover: no one has thought more creatively about the economy. Malden's weekly newsletter, which is what I was just referring to, is a must-read, and his book is even more important if you want to understand a rapidly changing world. So says Newt Gingrich, former Speaker of the House of Representatives. So this is a 10-year-old book. It was published in 2011. The debt supercycle is still going on. As we all know, the deficit just keeps rising, which of course means the debt keeps rising. And as we continue with the Treasury, the Fed and the Treasury secretaries keep easy money flowing, the debt supercycle continues to grow. So where Malden was kind of early in his book about the debt supercycle, early because it was early on, and it's continued on for the last 10 years. So well worth checking out that book, Endgame. Okay, so the market this week, green across the board. C Fund was the big leader, up 2.71%. S Fund up almost 1%. I Fund up about 1.5%. And F Fund up 0.12%. So for anybody in any of the funds, you're in the green for the week. All right, so what we're going to do on this week's show, the last couple of weeks we were looking at the Elliott Wave count, and ordinarily we look at it in terms of an increasing market. So this week we're going to look and see what happens when we're in a bear market or a declining market, and what does Elliott Wave look like in a declining market. Then we did head and shoulders topping pattern last week, and I want to do it again this week that will include this bonus chart for Peloton. Peloton, as I'm sure most everybody knows, absolutely boomed because of the COVID crash, right? Everybody had to stay home. Everybody bought, if you were trying to find dumbbells or kettlebells, you couldn't find them. And I think the price went from like $1.50 a pound to like $3 a pound. It's insane. Peloton also, everybody wanted a Peloton in their house, and so the price went way up. But what happens when the gyms start reopening and people want to do classes or with other people, or whatever? What's going to happen to the price of Peloton? We might have a little insight into what might happen, and then we will get into the daily 6-month charts. Okay. So this is the complete Elliott Wave cycle pattern that we put up either last week or the week before. And what we generally talk about in terms of the Elliott Wave is when the market is going up, right? And we talked about how the patterns within patterns. So we get 1, 2, 3, 4, 5, right? 5, which becomes the 1 of the bigger pattern, right? So this 1, and then ABC for the 2, and then we get the 3, 4, 5, okay? Then that 5, it's 5 of 5, and it becomes a 1, and the pattern just keeps going, right? So what happens, in the first little piece here, we had 1, 2, 3, 4, 5, and then we get a correction, the ABC, right? The C, which is the 2, theoretically will go down to the bottom of the prior 4. Got that? The C, ABC of the correction goes down to the bottom of the prior 4, theoretically. So that was the first wave and the correction off the first wave of this beginning Elliott Wave pattern. So the same thing for the 3. You got 1, 2, 3, 4, 5, and then you get ABC. The C comes down to the prior 4. Okay? So it does that all the way along. Now, the way this works is the 1, 2, 3, 4, 5 goes in the direction of the primary trend. So in this case, the primary trend is up. What happens when the primary trend is down? You get 1, 2, 3, 4, 5 on the way down, and then you get ABC up, which corrects this down move. So you get A, B, right? Then you get 1, 2, 3, 4, 5, which gives you the A, B, C. Okay? So this A, B, C corrected this 1, 2, 3, 4, 5. Right? It's all patterns within patterns.
And that last 2/C
This
is
one.
even with the 4 over there.
With the 4 over here.
Yeah. So it follows through the same. I just wanted to point that out.
Thank you. Actually, because that's critically important to the next chart.
Yeah.
Yes. So you have the little patterns within patterns, and you have the bigger overall pattern, right? This is a theoretical chart, okay? The next chart is going to be 2009. So imagine that's the bottom in 2009, okay?
I don't have to imagine. You're going to show me.
I'm going to show you. Where we are right here is a question mark, right? We don't know because we haven't rolled over yet. We don't know. We know that we are somewhere in here, but we don't know where exactly we are relative to the top of the top yet. But just because we're not there yet doesn't mean we don't want to know what's going to happen once we get there, right? So here's 2009. 1, A, B, C, 2, 3, 4, 5. Okay?
And this is pulled out 14 years.
It's 14-year monthly.
So if some folks missed it, like if we drilled in, we could see the little ABC 1, 2,
Yes.
3. You could
Yes.
see all that. It's just for simplicity's sake. Jerry's just pointing out from the 2 to the 5.
Yes.
Yeah, because the patterns within patterns are in there.
Yeah, it is in there.
Yeah.
But this is the theoretical view.
It's easier to see at that 14-year macro-wide kind of view.
Right. And it never looks, obviously in real life, it never looks exactly what it looks like.
Perfect.
It's not perfect, no. So 1, A, B, C is 2. And we could do the 1, 2, 3, 4, 5 in here to get to 3. But trust me, it's in there. You don't always have to have an ABC. We could actually, if we pulled this out, there is an ABC in there. But 4 and 5, is it going to be 1, 2? Are we in a 3, 4, 5 to get to 5 up here? I'm not sure. That's why I had the question mark, back here. Where exactly are we? I tend to think we're somewhere around there, but I don't know. But what I want to focus on here is what's going to happen once we get to here. What is this going to look like? So let's say we're at the top. Not that we're there now, but let's just say eventually when we get there, we're at the top. What's going to happen? We'll know it because we kept getting these ABC corrections, right? Things change when you get a 1, 2, 3, 4, 5 correction. Now you know that the trend has changed, right? If you connected these bottoms, we've gone outside the trend line, right? The ABC didn't take us down to the trend line, it took us past it. And then the recovery maybe took us back up to the trend line, but then we rolled over for the 5. This is the area where you know something has seriously changed. When you see a 1, 2, 3, 4, 5 down wave, it's a gigantic red flag. Something has definitely changed. So what's that going to look like when we get to the top of this? 1, 2, 3, 4, 5. ABC. 1, 2, 3, 4, 5. Which will give us A, B, C, and take us back down to this 4. So, if we know that A, B, C, it's not going to look like that exactly, but let's just say that's it. We should expect the next big market move somewhere, 2,200 to 2,500. That's a 50% drop from where we are right now. So that's if we're at the top right now and we go from, 4,100 on the S&P to 2,100 or whatever 50% is, we're right around that sweet spot. So if you also put the Fibonacci retracements on there, the 50% level is where it ordinarily, not always, but ordinarily is the bottom. So this is not supposed to be doom and gloom. It's just supposed to represent what happens on the backside of the Elliott Wave. So when we get 1, 2, 3, 4, 5 down, that's when you really know that the things have drastically changed. And for us, because this 5 leg is so steep, the 1, 2, 3 is likely to be very fast and steep. And so if that isn't scary enough, okay, we were doing ABC, right, to be equal to this 4, right? But we know that this was the 4 of the grand supercycle. So this is all theoretical. I'm not saying it's going to happen. It may not happen. But it's better to be prepared, and we'll know it. If and when it does happen, we'll know it. So we're going to get we're going to get like a 1, 2, 3, 4, 5 ABC. 1, 2, 3, 4, 5. Which gets us down to here. And then we take a breather and we say, okay, great. That means that we should start going back up, right? What happens if this continues down? So here you got 1, 2, 3, 4, 5. What if it continues down? Then it was 1, 2, 3, 4, 5.
Ouch.
Yeah. I mean, it would take a long time, but I don't know if it was last week or the week before when we put up the chart from the bottom in 1932. That 100-year chart is what gave us this 2009 4. So the first takeaway is if you start seeing 1, 2, 3, 4, 5 going down instead of up, that's the first giant red flag. So if we see a 1, 2, 3, 4, 5, we will have gotten out very close to the top. But if we see a 1, 2, 3, 4, 5, then we'll know to get back in. But we also expect it just to go ABC. So we might get a little bit of gain here, because the next move is going to be 1, 2, 3, 4, 5. And then we should definitely get back in here. If it continues down, now we know the collective we is in big trouble, and we just get out. Right? We'll get out there. That is as much of a crystal ball as I have on my bookshelf. The chart's really scary because if you go back and look, this...
That's when we wish we had an inverse ETF in there.
Well, we don't in TSP, but we certainly do in my account.
Yeah, on the IRA side.
Yeah. This move right here from 2009 to where we are right now, I mean, it went from 666 at the bottom of 09 to 4128 over that 11-year period. It was a gigantic move on a percentage basis.
Just because it may come up because I said it out loud, but do you happen to know off the top of your head what the inverse is? The inverse ETF is for S&P 500?
SH.
SH. I was going to Google it, but I figured
it's SH.
Grandpa Google wasn't going to get as fast as Jerry. But if you folks don't know what inverse ETFs are, it should just take a look, Google it. It's basically, as it says, the opposite of what that fund is doing or that index. And so, if you see something like this happening where you're going to see this long downward trend, doesn't mean you can't take advantage of it. Now, you can't in the TSP, but go open up an IRA at Fidelity.
Yeah, so to
take advantage of it.
To be honest, what I do, the vast majority of the money that I have, because I haven't retired yet, is in TSP. It's not in an IRA. And
I'm the inverse.
You're the inverse, yeah. If I think that we are, let's say I get into the stock funds. We just did a little bit of a correction, and I get into the stock funds on whatever day, right? I did it because it crossed this line, the 10-day crossed the 50-day, and it hit the resistance level or whatever, and I got in. I might buy the inverse of that fund for a couple of days, because if the market goes against me, then I'll make money in the inverse, right? I'll lose it in TSP, but I'll make it in the inverse. And if it gets below the support level, I'll get out of it in TSP and leave it in the inverse. So I will have taken that little bit of a loss in TSP, but it was a good time to get in it on the inverse. So I kind of use them as a hedge on those days when I'm doing an alert.
Yeah. And this is, something we were talking about earlier on the member-only call where, you don't have to retire to take advantage of certain things like this. You just have to kind of understand the principles. Right. And that's our hope, is that we're teaching these principles, whereas you may have the majority of your retirement fund in the TSP, as you probably should, because you can't find a G fund. Don't think that don't do TSP, do IRA. Now, if you're in the government, be in the TSP. However, you've got other options for other money that you may have, and this is a great way. Little things like that, little principles like that, are great ways to kind of hedge your bets if you're, but only if you understand these fundamentals. If you understand fundamental technical analysis and you kind of follow along with us, you're going to see these indicators, and you might be able to take advantage of it.
Right. That little scenario I just did is not a buy and hold on either side of that trade.
No.
Yeah, these inverse indexes, just in case we get a flurry of Facebook stuff about it.
You probably will know.
Yeah, so inverse indexes, inverse funds are great. In fact, you can buy 2 or 3 times. So the SH is the inverse of 1 time of the S&P 500, meaning
you can buy 2x, 3x.
Yeah. So if the S&P goes up 1%, the SH goes down 1%, and vice versa. SDS is 2 times the inverse.
Which means your risk is higher, because if it goes down,
yes,
you're losing 2%.
You lose twice as
twice as much.
So if the S fund goes up 1%,
I mean the other way, yeah.
Right. If the C fund goes up 1%, SDS goes down 2%.
Yeah.
Right. So you have to watch the C fund. If you do the Elliott waves and you count and you draw the lines and you've moved from the C to the G, because you're sure that the C, you're not sure. The probability of the C going down, right?
High probability.
That's the same time when you want to buy the inverse or the double
inverse. And
inverse
is not the same as short selling.
It's not, but it's a way to for the average investor to take advantage of the.
That's my point.
Yes.
Yeah, because short selling gets a little different. It's a little more complicated.
Yeah.
Not that you can't do it, but I tend to like this whole idea of inverse ETF, because it's especially in the application of it, meaning literally me going into my account and pulling it off.
Yep.
It's no different than me buying and selling any other ETF. So I just have to understand, how it works.
Right.
The inverse, and it's directly inverse, so it's easy to understand.
The only piece of it that people don't really usually read the fine print. It's all based on a percentage scale. So if you pulled up a chart of SDS, it doesn't necessarily look like the inverse of the S&P 500 on the chart. And so they tell you all the stuff up front. If you try to buy an inverse ETF, it'll tell you the goal is a 1-day goal. You can't sit in an inverse ETF, and if the S&P goes down, the S&P goes down 1% a day for 10 days. The inverse ETF doesn't go up 1% a day for 10 days over that 10-day time period. It does by individual days. Mm-hmm. So it's logarithmic. It's not the same. It's not the same.
Yeah. You do have to be on it.
You got to pay attention.
Yeah, you can't just Sorry, I took us that direction. But
inverse ETF buy and hold. Absolutely not.
No. You got to be playing the game the way we're playing it.
Yeah.
And I just always like to bring it up because, again, potentially there are a lot of folks out there like myself who are already retired who have potentially partial in the TSP, right, to protect a certain amount. It also depends on your age, right, where you're at age-wise, whether you want to leave some in TSP so you have access to it, right? We've talked about all these things before, but there's different strategies for this. And even when I was in the Feds, I still had an IRA, right, because I wanted to be able to do things, that I couldn't do in the TSP.
Yeah, if you have the money you can max out TSP and
max out an IRA. Yeah, and it's a great mechanism because you can be in my circumstances, I chose to be a little more risky in the IRA than in the TSP.
Yeah,
and there wasn't as big a pot at stake. Plus, I had a lot more options. Right, I can get in and out anyway.
Yep. One last thing on this chart is just. Like I started to say, I don't have a bigger chart that goes back prior to 2009, but this move, if you looked at it on a big chart and on a percentage basis, it's a really fast move higher. If you look at it on a bigger chart, I know it's 11 years, but on a 100-year chart, this kind of percentage move was unprecedented. Let's put it that way. So if this move is unprecedented, and the majority of it came from here, right? This rate of ascent is ridiculous. I mean, it's ridiculous. It is unsustainable. And when it comes back down,
probability,
it's going to be ugly.
The probability is it's going to be just as drastic.
Yeah.
Not necessarily that it's going to happen, but the probability is there because it's just historically.
Yeah, I mean, I can't imagine that it would go sideways from
wander
here.
Its way down.
No, you're not going to see that. You'll be lucky. And it's the only other possible Elliott Wave count here, honestly, is 1, 2. How did I do this? It's actually really not, because if you say 1, 2, right, and then you say within the 3, it goes up 5 steps. 1, 2, 3, ABC is 4, 5. Which would make this the 5. And then for a 1, right? So 1.
So we'd be
2,
starting over again.
3, 4, 5. So if we've already gotten to the top, is what I'm kind of saying, right? That would be the 5, and then this would be 2. And if that's the case, we're in for a long 3, right? That's the only other possible Elliott Wave count. And it means that this would have to be the 2, which it's too short.
Yeah, it starts to conflict with a lot of other rules.
It conflicts with the rules, yeah.
Yeah, and that's not just Jerry saying that. Anybody that's doing an Elliott Wave count of the S&P 500 would come up with the same.
Yeah, I mean, I'm trying to pull out any other possibility than this being a 4, right? So the way I did it before, this was 5/1. This would be 2. It's not impossible, but the probability is about 1. It's like 0. It's like basically 0. Yeah. So really what we want to focus on is the fact that this 5 leg, the rate of ascent is really frightening. So at some point, ABC. If we get that and we keep moving higher, awesome. I think you guys got the idea, but we're not there yet. We're 1, 2. We're in what I think is a 3, 4, 5. I think we're going to get something like that. I think we go higher for a little while, and we'll know as soon as we get there. Okay. So I just wanted to give a deep dive sort of into what the backside of the Elliott Wave pattern looks like. That's why we did that. Okay. Head and shoulders topping pattern. So last week we showed head and shoulders. You got the volume increases as the left shoulder is being created, right? Then you have a correction. Volume is decreasing on this correction, right? Then you get the head, which means higher high than the left shoulder, but volume is decreasing on the head, right? Where here the volume was increasing when the price was going up, here volume is decreasing as price is going up, and you get to new highs, okay? Then the correction off the head takes you back down to the prior low, right? And the volume is pretty big. Off the prior low, price moves higher again, and volume continues to decline, right? It means there are less people buying into this rally. Then on the right shoulder, when it's coming down, volume really starts picking up until you get the breakdown point, and then volume really picks up because everybody sees what happens and everybody's trying to get out. So last week, we showed what that looks like in real life on SAIC. It's a government contracting company. Price came way up in November, topped out, corrected off that, that's fine. Price came up to new highs, corrected back down to the same level, and then the right shoulder. And when it broke below here, it broke down pretty good. Ordinarily what happens is it'll come back up and test the neckline. Price here came up and got above the neckline and then rolled over, which is fine. But then we had like a 15% drop in one day. Okay. Head and shoulders chopping patterns are ugly. So we talked about this a little bit earlier, which was the, what do we call it? The extra chart? The bonus chart. Here's a weekly chart of Peloton. Okay. Peloton was, doing pretty good, whatever, back here before COVID. But once COVID hit, and we figured out that everybody's going to stay home, and everybody wants a Peloton, price just goes through the roof. So let me just stop and explain what this chart is. Ordinarily, I just do a regular price chart, and that's actually what the next chart is going to be. This chart is logarithmic. So what you do for a logarithmic chart is as price increases, each increase in price decreases on a percentage basis, right? So from 2 to 4 is 100% price move, right? From 4 to 8 is 100% price move. So to get the same percentage basis price move, you'd have to, as the price gets higher, each price increase becomes less valuable on a percentage basis, which is why the chart looks like this. So we still see huge volume creating the left shoulder, right? Then we got pretty big volume on the downside right here on the correction, right? Then we got the head being created, and the volume is way lower on the head than it was on the left shoulder. Okay? Then we rolled over, and we came back down to the prior low. So now we have a neckline. Okay? And the volume has picked up. I mean, it doesn't look huge on this chart, but relative to where on any down day down here on the left shoulder, the volume, negative volume here on the right shoulder is pretty big. We've already had on the indicators, that was the high, that was the left shoulder. The head barely got positive, right? And we're clearly in a decline in relative strength. So even though the price here has ticked up for the last 2 weeks, the trend on relative strength is down. And the MACD already crossed negative here, okay? So I don't know, it's possible that we got support here, it does one of these and then goes higher. It's possible. But before the show, we were talking about fundamental analysis and technical analysis. Here's a piece of macro fundamental analysis that contributes to this chart. We all know everybody's going back to, well, maybe not going back to work, but people are trying to get out, gyms are opening, we're getting to the end of the COVID thing. So we would expect that the demand for Peloton would decrease because people are going to go back out to the gym, right? So is that consistent with say we get herd immunity or, whatever, is it consistent with price rolling over and breaking through that neckline? It doesn't mean it's going to happen, but the timing in terms of the fundamental analysis seems pretty good, right? We also got resistance here at the 10-week moving average. Right now we get support at the 50-week moving average, but if the 10-week comes down and crosses the 50-week, as price just crosses the neckline, I mean, it's kind of like the perfect storm. I'm pretty close to shorting Peloton at this point. I'll just say it. And here's what I would look at. As this 50-day or 50-week, this is a weekly chart, as the 50-week moving average continues to go up and the 10-week moving average comes down, if price can't get above that 10-week moving average, as soon as it crosses below the neckline, I would short sell it. So what does that look like on a regular chart? This is not logarithmic. This is actual price on a regular price scale. Same thing. Huge volume going into the left shoulder, big volume on the decrease, very light volume creating the head. Volume is increasing on the downside here. It looks a little bit more dramatic because it's not a logarithmic scale. So I just wanted to show the regular price scale. So what would happen? We get the same resistance here at the 10-week moving average, and we get the same support here at the 50-week moving average. So this is a really easy trade, actually, because if we keep getting resistance at the 10-week, if we break support of the 50-week, it's a no-brainer. We broke support at the 50-week at the same time we broke the trend line. I mean, it's a no-brainer. And there are a lot of these head and shoulder topping patterns that are coming up in companies and indexes that have done really, really well during the COVID pandemic. So we will see. Okay. TSP fund charts. C fund. I keep this slide up here just so that everybody has the ticker symbols that we use. Since the TSP doesn't have ticker symbols, they are the TSP funds passively track the larger indexes.
And if you can't find the S fund, the DWCPF, you can also use VXF.
Yeah, VXF is an ETF.
Right.
That
some charting places don't have the DWCPF.
Annoying. EFA and AGG are both ETFs of the bigger index. So, okay. C fund 6-month daily. We had a pretty nice breakout right there. I think last Monday maybe, and it continued. C fund's doing really well. We just got to overbought levels, which overbought doesn't mean it's time to sell. It just means it can stay overbought for a long time, and price can continue to go higher for a long time. So when RSI is up here above 70, it's actually a pretty good thing. MACD shows no sign of rolling over, right? The black line is actually diverging from the red line, which means there's more momentum going higher. The only negative on this chart is volume. It's like every day the price moves higher, the volume is moving lower. So what does that mean? It means fewer shares are being traded, which means fewer people or institutions, money, fewer shares are being traded as the price goes higher. So people is a bad word, but I don't have a better word to use. People are not buying into this rally.
Right.
Does that make sense?
Yeah. I mean, it's people that are running the institutions, so we
yeah,
just say people.
Yeah.
There's a lot of big money in there. It's not just like you and I.
Right. Right. So what you want to see is like this. Like you see that big day right there? That's the beginning of a new rally. That's big money buying big blocks of shares, and that's why we get that move. This decreasing volume over time as price increases means what they call smart money, quote unquote, is taking their money out, and dumb money is driving prices higher.
Is buying, right? So large institutional money, the big folks are not buying in, and there's enough of us out there that are willing to pay that price
to drive that price up
and drive it up.
Yeah, that's exactly right.
So it's not as strong, right?
It's not.
It doesn't have as good a foundation.
It doesn't mean it can't keep going higher.
Absolutely not.
It just means right now institutions are not buying into it.
And that doesn't mean institutions are right.
Correct.
Bigger picture, they drive a lot of what goes on.
Right.
But the important thing is like, because this is an index, that wouldn't be the case if we were talking about one individual stock.
Yeah, no, not the same.
Way more volatile, right? But that's why we deal in indexes. And so it's just, all these things are indicators, which we kind of throw that word out there all the time, like it's just no big deal.
Yeah.
But there's never one indicator that tells you the story, right? That's clue, right? We're both, Jerry and I, most people know, come from law enforcement background, right? So
it's a clue.
It's a clue. It doesn't mean that that's what happened.
Right.
It's one
It's an
clue.
indicator.
Yeah, it's an indicator. Yeah. And so in analysis, right, you have to have multiple indicators. You have to have several things telling
overlapping
you,
indicators. Yep.
Yeah, that this is what's going to happen. So when we see that kind of anomaly indicator, it's kind of how I think of it. It's like there's something that's outside of the I forgot the dots. Yeah, it's outside of the box.
Right.
Whatever. That just makes you go, well, why? Right? And so you dig into that a little deeper. I just like to point that out because sometimes we just kind of brush past stuff like that. And I'm always trying to put myself in the place of most of the, new folks that we have watching this going, I don't have any idea what you just said, right? Because it does seem simple once you learn these things, right?
Yeah.
But what you just pointed out is a reason why you want to pay more attention.
Yes, it's not like I'm not selling the C fund here. It's the price.
Yeah,
but prices looks great, and it's the most
understanding
important.
Why,
but understanding the concern behind it,
it
makes me. If I owned the C fund, I would be watching it closely because if volume isn't increasing as price is going up, that means I'm the dumb money, and if I'm the dumb money, I don't want to be in there all that long.
Don't want to be the dumb money.
Yeah.
And you go back to that point you showed on the chart. I've got the chart back up there where there was that big volume on that rally.
Yep.
That's an indicator to tell us, I feel more comfortable, right? There's a more foundation for that rally.
Absolutely.
It's got some substance to it. Where over here you're going, volume's going down and price is going up. That tells me, anyway.
It's also possible, I mean, I'm pointing to this, and it, while it did gap up that day, it's also possible that it was on a quadruple witching day. Which
right,
that's why every 3 months you get something like that.
We have to write a blog article just about that.
That quadruple witching day is just
It
basically means the options on a handful of different big indexes are expiring, and it's the third week of the third month of every quarter, I think, something like that. Mm-hmm. It's a very big deal, but it doesn't mean the volume on those days don't mean anything.
You kind of wash those out.
Yeah.
But to wrap it up, though, there's a lot of good indicators here.
Oh yeah.
Just that one that makes you make sure you're paying attention.
Yep, that's all. So that's all. Pay attention. Okay, S fund. It's a very different looking chart from the C fund, right? S fund has been in this consolidation since the middle of February. So we had a big run up, and we got an A, B, C consolidation. So theoretically, we got, we also have support here for the last week or so on the 10-day moving average line. Sorry, the 50-day. So the 10-day actually crossed down. 10-day is red, 50-day is blue. The 10-day now is coming back up and will cross to the upside. And we have support right here on the 50-day. So I'm actually pretty happy with the S fund here. I think the consolidation that we have going on is like a spring. It creates sort of pent-up demand. So what we should get from the S fund is a pretty good move higher, as opposed to the C fund where we're trudging along. We're hitting that 50-day and we're moving higher, and it could keep going higher. It's just that the S fund has, at this point, a little bit more pent-up demand for it. So ideally, it sort of springboards us that way. And I would sort of argue that it's supported by where we are down here. We have a lot more room to go higher on the RSI, and the MACD just went positive. as opposed to the C fund back here where, our crossover was back here in March. We're already getting to, an overextended level on the MACD, and the RSI is already topping out on the C fund. On the S fund, we have a lot more room to go on the RSI, and we just did the crossover on the MACD. So I like the S fund better right here, but it doesn't mean that that it will outperform, but I'm thinking it will. We've been talking a lot about the I fund and how we're sort of anticipating the I fund to start outperforming both the C and the S fund. It hasn't happened yet, but it did break out from this bullish triangle. I can't remember which day of the week it was, but you can see it's a pretty good breakout. Since then, it hasn't really exploded off there. It's kind of consolidating back there on that, above that upper channel line, which is fine. But we should definitely see the I fund continue higher. The MACD is relatively low, right? It can get all the way up here. RSI still has room to go higher, and yeah, not bad. The volume on the breakout day was lower than than the day before, but higher, or relatively high in general. So not as great as what we would want to see, but the pattern is actually really good right now. So I'm pretty happy with the way the I fund looks. The F fund, we've shown basically the same chart here for several weeks now, and because it's a really good Elliott Wave pattern. 1, ABC is 2, 1, 2, 3, 4, 5 is 3, and we get ABC we think is going to be 4, and then we should get 1, 2, 3, 4, 5. It's as clear an Elliott Wave pattern in real life as I've seen in a while. I mean, it's crystal clear to me. The only question, the reason I have a question mark on that 4 is because I don't know how high it's going to go. So what I would expect at the most, the highest it goes, is hits resistance at that 50-week moving average and then rolls over. So if you were going to buy an inverse to the AGG, which I'm sure there is one, I don't know what it is off the top of my head, but I would watch this 50-day moving average and this 10-day moving average. The red line here is a 10-day moving average. If it gets back below it, chances are it's going down to a 5. All right.
Questions.
That was kind of quicker than usual.
No, we're right on time.
50 minutes on my screen.
Yeah.
About that. Okay. Anything in
it
there
wasn't
you want?
An hour and a half.
Yeah, no, that's good. That's
a couple
good.
shows ago, we went pretty long. Yeah. I like them just under an hour.
Anything in there you think?
Because I got to go pee.
I kind of like the Peloton chart. Which obviously is why I put it.
I hope everybody's liking these bonus charts. So the idea, at least from my perspective, bringing them in is so you guys can see that these, technical analysis techniques, they work in any given chart, any given security, right? Whether it's an individual stock or it's an index, you can use these tools, and the better you get at these tools and recognizing this, I mean, great. If you're like in the Bitcoin craze or cryptocurrency craze, go for it. Use sound analysis techniques and go for it. Like see how it works out.
You can definitely do Elliott Wave on crypto. We talked about doing it on Tesla.
Because all technical analysis is based off price. Yep. Man, because technical analysis only cares about price, I don't say we, but if you're in that camp, you don't get bogged down by fundamental like why or how, or we don't care. We're just looking at price, and price goes up and down, and that's based off buying and selling, right?
Supply and demand. Yeah.
That's it, supply and demand. So, and that's human behavior.
Yep.
Which human behavior has patterns.
Which Charts.
Which
Price
show out
charts.
in
That's
charts.
it. Yeah.
I mean, it took me a long time to buy into this kind of idea. And honestly, I didn't until, I was a knuckle dragger for 20 years in the Army and the reserves. Found reason to send me to like military intelligence school, and no interest really. All transparency, love MI folks, but I wasn't an analyst. But I learned a lot about analytics, and that started me down. But I'd always been a tech guy, so understanding data analytics like really got me to like there's trends and patterns whether we like it or not.
Yep.
It's particularly if you're attaching it to human behavior, because we do. And so that's really where the buy-in for me was, like seeing over time these patterns and trends hold true. And once the probability is high and the percentages are high, you can make decisions off of it.
Right.
Doesn't mean you're always going to be right.
Nope.
But you can make decisions.
The beauty of it, honestly, is once you get to that point, you can figure out the most probable direction, and the next step is the most important step. If you're wrong,
right? What do you do?
What do you do if it goes? If it goes against you, when will you know?
Where's your line in the sand?
That's like the thing that enables you to play again tomorrow because you didn't lose all your money today.
And that is another thing that kind of separates what we're talking about from like market timing, because the basis of market timing is that I'm going to guess.
I'm predicting.
I'm predicting what's happening, and a lot of people think that's what we're doing, and we're looking backwards. We're not looking forwards.
So we were talking about it before. It's interesting because actually, can you flip back on the?
I can do whatever you want.
Okay. So let's just. I haven't looked at this, and so I don't know what goes backwards more in Peloton. But let's just say, for the sake of the argument, that this low right here is a significant low in Peloton. So let's say this is 1, 2.
It hasn't been around that long, so there can't be a whole lot of history.
Well, actually, this is the IPO right here.
Yeah, I was going to say it can't go back much farther.
Right. So the only problem with this Elliott Wave count that I'm going to do is that the 2, I'm going to call that the bottom of the 2, cannot be below the beginning, and so this count is not valid. Okay, it's not. But let's just say this. Let's pretend it is. 1, 2.
Just to show the principle.
Yeah. 3, 4, 5. Okay? Let's say that's the actual count. And if you look at that, I mean, the principles are the principles, but, there's a little bit of wiggle room. So no matter how you look at it, usually the 1 is relatively low, relatively small. The 2 is a consolidation phase. Literally means people are buying because they've already seen this price move. There's a lot of low volume buying in here. And then once something happens, COVID in this case, it creates the third leg. So in this case, we had a giant third leg. And we know A, B, C, right, was the fourth leg. So if we...
And that's folks trying to figure out. They're buying, so the corrections are happening. This is a question.
Yep.
It's people trying to figure out, are we at the high, or is it worth this much money?
Sure.
Is it, they're back and forth, right? So you got that kind of like zigzag corrections.
Yeah.
That's literally people going, I don't know, maybe, yes,
right.
I don't know.
Right. From me looking at it, I'm looking at this huge run up. I'm like, oh, that's a 3, because that's usually how 3 legs work. You get a short 1, a short 2, a giant 3. 4 tends to be the same length as 2. If 2 is flat, 4 tends to be down, and vice versa. It's actually usually the other way. Usually 2 angles down and 4 is flat. But in this case, we have the opposite, which is fine. But and then you draw the trend line. You had an ABC that went down to the trend line. That's an awesome buy point right there. Because if your count is right, 1, 2, 3, ABC is 4, you're at the trend line. That's an awesome buy point right there. Because chances are you get a 5 coming. And that's exactly what happened. If you're wrong, no big deal.
Have your line in the sand.
Yeah, you drew the trend line. It did ABC, you bought it. If it got down here somewhere, you sold it. Your risk was like whatever you decided it to be. It's not much.
Yeah.
In this case for the 5,
because it would have gone against it, would confirm to get out, right? So then when we draw that line, that's literally what I'm doing when I'm looking at my charts. Is I obviously don't have as much experience at this as Jerry does, but once you draw that line, and that's your line in the sand. Yeah. It's like, okay, if I wake up tomorrow and it clearly goes beyond that, I'm out.
Yep.
I'm out.
And you know what your risk is. That's the beauty. That's why this stuff is awesome, because you can quantify your risk. I mean, to the penny if you want.
Yep. That's
it. So one last thing about it. If you thought that we were at 1, 2, 3, we did ABC, and you bought it at the trend line, then the next is a 5. So you'd expect the 5 to move at least as much as the 1. Now, sort of, this is the crystal ball thing, right? We know we expect it to be a 5, so it's at least going to get above this. We bought it here. It's at least going to get above here. We don't know how high it's going to go, and we're looking for some kind of topping pattern. We got that.
We got it.
So I wouldn't get out. I wouldn't have sold out of Peloton
until it crossed
that day right there.
Yeah. Because then it confirmed your trend line there is.
Yeah. So I would have bought it.
Time to get out.
I would have bought it right there and sold it right here. So say I bought it at $100 and sold it at 150.
Yeah, and the cool thing is if you're playing this game outside of the TSP, which, obviously we're not encouraging people to do that. Yeah. We just know that a lot of people do. And so the great thing about that is, depending on what trading platform you're on, you literally can just punch in the price.
Yeah.
And say, you don't have to look at it. Just say, if it hits this, sell.
Buy it or sell it. Yep.
And that's magic, right? I wish we could do this kind of things in the TSP. But when you know where your lines are, you don't have to watch it as closely. Particularly if you're doing this outside of TSP. You're just like, if it hits this point, sell. And you get I get a little notification from my Fidelity app that says sold.
Sold.
Yeah, and so it's pretty cool. All right, we made sure we milked us all the way to an hour.
Yep, we got right to an hour. Perfect.
56 minutes. Hope you guys enjoyed it. If you did, please share it with your friends. Again, if you are a member of the site or you become a member of the site, make sure you join the members-only Facebook group. It's new. We're able to dig into a lot of different topics there more than we would here in the public group. And, other than that, I hope you guys have a great week.
That's it.
Boom. Cue music.
Peace.
Never hit that loud enough.
You did hit record.
No.